Well, hello traders and investors. I'm L.A. Little and this is your daily NeoTA wrap. We take a look at these markets, doing it from a neoclassical perspective. We're looking at supply and demand on the charts, and we're using that to determine when to get in, when to get out, which way to be pointing. That's what you need when you're trading. You need a solid model. That's what the neoclassical model is all about. We use a portfolio to teach. We focus on education. And if you're interested in really learning how to trade, then you really should think seriously about what we do. Do this show 4 times a week, every Monday through Thursdays, broadcast at or before 10 o'clock Eastern Time. Archived on YouTube, son of a channel, L.A. Little. And if you want to subscribe to the show, reach up in the right-hand corner and do so anytime I push public content. You'll get a notification. As far as what these markets do today, started to try and turn this thing around. Now, the market's been strong, been extremely strong. You had 10 out of 11 days up on the NASDAQ. But today you get a failure. You actually get an over-under on almost all the indexes. If you go across the board, you have red pretty much across the board. Dow was the only one that escaped with a small gain, but even the Dow did a doji and an over-under as well. Gold picked up some gains, as did silver, as did oil, as did the TLT. What are we seeing? Rotation in that stuff that usually don't get any favor, and out of the stuff that does. That's a topping type move, at least short term. I don't think it's something you get overly focused on, but it is a change. It's a change of behavior. Let's look at the actual charts and see what we got here. S&P 500, let's start with that one. Over the top, just barely, right? Got over it by, what is that, 0.31. The bar before it was 0.30 by 1 penny. A little bit less volume, over, under. I don't know if I'd call it an extended move. In the short term, it's kind of extended, but this is a decent chance for some sort of a retrace to come out of it. And it's a decent chance because it happened everywhere. It happened on the Dow, as I said. Here's a doji on the NASDAQ composite where you got an over-under less volume. Same thing on the NDX. You got an over-under there as well. That's on lower volume too. And as you saw, as we popped in, the Russell pulled back, but the Russell was the only one that didn't do an over-under. It was actually an inside bar. So 4 out of the 5, 3 out of the 4 majors all do over-unders and look as if they're going to try and pull back tomorrow. Now, in neoclassical, what you do is you ask yourself what should happen, and then you let the market tell you if what should happen does happen. If it doesn't, then that can tell you something, right? And if it does, it tells you something. Both cases give you information. What you're always waiting for is those various tests to take place that release that information, and that's what we're seeing here tonight. If we look at the major sectors, and I've not had a chance to go through these, so we'll just flip through them together real quick and see what we got. Biotech, over under, a little bit less volume after an extended move on that one, so that one looks like it's going to try and pull back. If we look at the IYT, now the IYT actually broke out and is trying to break out on a weekly basis as well. It was over, but now it's back under on the weekly. One more day, you close there. That says you got an over-under test failure of the highs on the weekly, which would also signal a pullback. The semiconductors, they've been strong as an ox. They're still hanging at the highs. If we look at the basic materials push up towards the highs. They're stuck on this big bars high. You can see the resistance zone. All the bars of the resistance zone, all 3 anchors involved in that resistance zone. That's pretty tough to get over. Another doji as it hangs up there near the highs. XLE, now energy has had an up and down run, a nice big spike as it came here. If we go to the the weekly, you can see a nice gyration to the top, but now it too is succumbing to that pressure to the downside again. And we'll see what the real flavor of this is or isn't. The one thing that you always are looking for is, can you get over a swing point high, change trend? Well, this one got up to it, failed to get over it, and now is trying to push back down. That happens to be, if you look a little farther to your left, that happens to be a bearish retest regenerate after more, well, I can't say that. It did a regenerate. It got back over it here and then got back under it. Now you're just simply coming back into a swing point high and that same area, and it was unable to get back into it again. Elsewhere, XLF, let's see what that one looks like. So now the financials were the ones that got the transitions to the top side. Inside bar doesn't tell you anything, less volume. That one actually still looks okay. XLI, the industrials, also looking okay. So there's two sectors still looking all right. Technology sector, that one stays over as well. So we've got three significant sectors staying over the highs. XLP staying over the highs. So there's 4 out of the 9. XLU also at the highs, 5 out of 9. Of course, the latter two, they're not that big in terms of size. XLV inside bar also doesn't look bad. Finally, let's look at the discretionary. And if we look at that one, inside bar. So when I look at the sectors, remember, when we focus on stocks, what we're doing is we're asking, what is the index? What are those sectors look like inside the index? The sectors move the index. Now, the index sometimes can lead to a turn in the sectors. That may be what we have, but usually it's bottoms up, not top down. And so these sectors, most of these still look okay, even though the indexes are giving us a little bit of a signal that they want to pull back. And what that tells me when I see that non-congruence between sectors and the indexes is that it's going to be very tough to pull this thing back. So tomorrow is going to be a hard day to get this market to trade down. If it does, that does tell us something's really going on, and we actually are going to get some sort of a retrace. Let's pop over and look at the currencies. I saw the dollar was pretty weak today. Let's see what that one looks like. Yeah, pretty good pullback there. So this one got up over a swing point high and did a test failure. And look at this now. This is kind of classic. So what you have here is you got a big wide price spread, high volume. Actually, it's not that wide a price spread. It's a high volume bar though. You go into it here, you can't get over it. You test fell. You try it again the very next day. You test fell again. What happens? You get a big spike down. Gap down, stays down. That is kind of classic in the way that one's set up. So looks like more of a push to the downside probably on the dollar. Let's look over at the euro, since the euro is the opposite of that. And what we may see, and you got a pretty good spike there into resistance. This is going to be a key spot on the euro, 103.73. You get over that, you can go back to the top of the range. If the euro starts pushing up, the dollar starts pushing down, that should help the gold and silver markets, which is what we kind of saw today. We saw some movement into those. Let's pop over, take a look at those real quick, since we've been following those. And since we had one of the viewers ask us to follow that, since we were talking about an ABCD structure that appeared in one of my books, this looked like an ABCD structure that was there. So here's the pullback. You come into a bullish retest, regenerate, and what does it do? Starts to regenerate. Now, when do you know that it's really regenerating? Well, when you get over the ABCD structure, right? If you get over the B point, then this regeneration that took place off this swing point high retest, right, as it retraced, really is regenerating, and then you should have a pretty good probability of continuance to meet the ABCD structure's objective, which would be quite a bit higher. You can get a number on that. Just take this number 114, take the high, it's about 118.59. That's about what is that? About almost 450, just a little less. That puts you up to about 120.40 something. So about 120.40 is the target if you make that move. Looking elsewhere, we haven't looked overseas in a while. Let's see if there's anything interesting over there. I'll take a quick look at the DAX, for example, see what that one looks like. DAX got up, tested the highs, couldn't get over it, right? Got close to it, got into the resistance zone, and that's also after a big push up here on the weeklies. If we go over and look at the Hong Kong, Let's see what Hong Kong looks like. Pretty good volume coming in on Hong Kong, so we're getting a nice move on Hong Kong. This looks like it has legs, folks. Let's so pull the monthly over, right? Because we always look at 3 time frames. Now the monthly is more interesting. You got this huge breakdown bar, top of it's there. That price point is 24924, and if you go here, that's also 24926. That is a serious resistance zone. If you get over this, folks, you're going to the top. You get about a third of the way into it, you're almost certain, but that is such a critical resistance zone. That's your measure as you come back into it. So if you're playing this market on the long side, you gotta be careful as you get here, because I suspect that's where the sellers are going to show. But if you get over it, right, then you can run all the way back up to the top. Looking pretty good in Hong Kong, and I assume that means China itself is looking pretty good. If we pull China up, yep, China's got the same thing. There's your breakdown bar. It's got the exact same setup, folks. So that's both those markets traveling together. Overall, you've had a great leg up, a great push, right? If you haven't subscribed to my Twitter account, you might want to. It's just TA Today. It's on Twitter at Twitter. That Twitter account I did point out today, the public one. I have a private one that members get. I did point out there that it looked like you're getting a little toppy up here. You had a great run, right? You pushed up high. You got the follow through. What you're probably going to see here is the pullback, right? The retrace. And it's never the first retrace that you have to worry about. I shouldn't say never. Never's not a good word. But it's seldom the first retrace that you have to worry about. So let's just call that a high. Let's say that we retrace. Let's say we take half of it back, right? It's the push back up that you have to worry about. Can it get to new highs? Will people pay up? That's what Neoclassical is all about, right? When you get to places where people have to pay up, are they willing to? If they are, they're telling you something. They're telling you something you really need to pay attention to. That's where the market talks to you, at test. Testing is what the market is all about. It's how the market speaks. It's how you, or what you, should be listening to. That's it for tonight. Have yourself a great one. Have a great weekend, and I'll see you next week. Good night.